السلام عليكم ورحمة الله تعالى وبركاته. بسم الله والصلاة والسلام على رسول الله. اللهم علمنا ما ينفعنا وانفعنا بما علمتنا وزدنا علما. Hello everyone, this is Liquidity by Ahmed Shawi. Today is Sunday, the 1st of September 2024. I'll be doing another weekly review. Starting with the XY, here we have the weekly time frame chart. As you can see, we even capitalized on the sell side liquidity right there, and we've seen a reaction towards that inverted favorite gap. This candle's high and this candle's low. From here, this is where we stop trading. Going to next week, going to the daily time frame chart, you can see how we traded towards that favorite gap. So this is a SIBI, sell side imbalance, buy side inefficiency. So it's inefficient with buy side delivery. And we can see how price started pretty much seeing buy side delivery here. You can see the smooth edges that forms the favorite gap low that have been rated here by the market, see by the algorithm on Friday last week. So going into the next week, if we trade up above the favorite gap and the inversion favorite gap here, and we close above them on daily basis, we're likely going to be seeing run towards this buy side liquidity right there. Otherwise, I'm expecting pretty much a run down lower one more time, because even though this is a low and we took out the sell side liquidity right there, I'm sure, and I'm not, it's not about like I'm sure or not, there are still more orders that are residing still below this low here. So the probabilities will increase when the low that has been formed or printed has is a higher low. But in this case, it's a lower low than this low. This doesn't invalidate that this is not good, or this is not a sell side liquidity. It's still a sell side liquidity, but we took out some of the sell side, some of the orders that are residing below the sell side liquidity. But that doesn't mean that we completely took them all out. Now, if it has if it would formed a higher low, where there's a low here, but it's higher than this low here, this will pretty much increase the probabilities of price reaching towards the low, since retail traders are trusting it as means of support that they can be buying at, and pretty much setting their stop loss anywhere in below the sell side liquidity, below this low, trusting it that it won't run against them. So this is not the topic of our discussion here. What I'm trying to say here is that from here, it's pretty much I want to demand more intel from price, how we react towards this favorite gap and the inverted favorite gap. From there, I'll be able to pretty much discern what is the direction for the next week, or pretty much for the upcoming month. So that is going to be pretty much it for DXY. Going to ES, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, we traded down lower into the favorite gap, the busy buy side imbalance, sell side inefficiency, so it's inefficient with sell side delivery. We pretty much touched that favorite gap as a means of an institutional order flow entry drill, and we retraced up higher and we closed above there with an up close candle. So we're measuring the consecutive encroachment of this discount wick, the midpoint, if you'd say, of this discount wick. And that is a crucial level for me. I don't want to see price close on daily basis below this level here, which is roughly the 5,600 level on ES. So going to the daily time frame chart, you can see that it's pretty much the 5,600 is pretty much the low here of these candles, which have been raided here last week on pretty much Wednesday and Thursday. We rated this side liquidity here, and we touched the weekly favorite gap. We have a daily favorite gap here that hasn't been touched yet, but you can see here the small volume imbalance here, right there. You can see how the bodies are respecting it. It took the sell liquidity, but how far did it went below that sell liquidity? We have the volume imbalance here, and the wicks are doing the damage by reaching towards that weekly favorite gap. So you need to mark all of these things that I'm mentioning throughout this weekly review and every weekly review, because these are like key points that you need to study how price is reacting from these levels. So from here, I'm expecting price to just run towards that buy side liquidity. These are smooth edges, and market would never want that in the pretty much would never want that. So it would want to make them jagged, and that would be done by pretty much running over these highs right there. So that is going to be pretty much it for ES. Going to NQ. Here I'm viewing the weekly. This here I'm viewing the continuous contract, and I'm viewing the weekly time frame chart. As you can see, we had a deeper retracement here on NQ last week, and I'm also measuring the constant enforcement of this discount wick too, to measure how price is reacting to it. And you can say approximately it's the 19,400 level. So this is a level that I'm monitoring going to next week. Going to the daily time frame chart, you can see how price drifts down lower towards that daily favorite gap. This candle's high, this candle's low. The bodies are respecting favorite gap. The wicks are just doing damage here by overreaching a mohawk, as you can name it. And we're starting seeing some movement to the upside. I'll be aiming at this as means of the first partial target here, and the terminus would be at the buy side liquidity at the 20,983. You can round it to the 21,000 level. So that's what I'm aiming at here regarding NQ. Going to Euro USD, also known as the fiber. Here I'm viewing the continuous contract. Here I'm viewing the weekly time frame chart. Actually, there is no continuous contract because this is not the futures market. As you can see, after we traded and took out the buy side liquidity here, we've seen a sharp retracement down lower. We've still yet didn't reach towards that favorite gap. Going to the daily time frame chart, you can see, but we traded towards that daily favorite gap. So going to next week, I'll be monitoring if it wants to trace down lower towards that bullish order block right there, this down close candle, and the weekly favorite gap. I'm expecting the bodies of the candles to just stop right at the bottom of that favorite gap. But the wicks can do the damage by reaching to the bullish order block and to take some to also reach to that favorite gap, the weekly favorite gap. So that's how I'm expecting it, and how we trade at these levels. If we disrespect them, it is very crucial for me to note that, because this might be a shift in the program, and we might start seeing slower price. But going, as you can see from the weekly time frame chart, we still have this rejection block and the buy side liquidity that are still yet to be raided, if you want to name it. So I believe that is going to be pretty much it for EU, or also known as the fiber. Going to pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. As you can see, the same thing is mentioned here on pound USD after taking the buy side liquidity. There's also another buy side liquidity that is above this buy side liquidity. You can go to your chart and you can check it out. It is approximately at this level, 1.33 even, you'd call it. So we've seen a retracement here. As a result, we're forming the favorite gap, BC. So now I'm expecting next week for price to retrace and walk inside this level here. Going to the daily time frame chart, you can see that I'm expecting price to pretty much retrace down lower, work inside this weekly favorite gap. Now, what am I looking at exactly inside this weekly favorite gap? Now, this is a big area, but there are specific levels, and there's also other levels that are influenced by other BD arrays, and I'll try to explain what I mean here in a second. So we have this favorite gap. We just look at five. Mainly, we have three levels, but there's two optional levels that you look at. We have the high, the constant coordinate, which is the midpoint, and the low. These are the main levels in the favorite gap that you must look at. You must pretty much annotate. You must note in the charts or on a notebook, whatever makes you happy, whatever makes you sleep at night. But you gotta annotate these levels. Now the optional levels that price do react to are the quadrants, which are the 25% level and the 75% level. Other than that, what I mean earlier with other BD arrays influencing the fair value gap. Now, if you look at this swing, the sell side delivery that was, or the sell side, yeah, you can name it, the sell side delivery that was done in this swing from this high which is roughly mid-July to early August. This swing down lower, there was absolutely no fair value gaps other than this one small inversion fair value gap. Now it's called inversion fair value gap because we traded up and closed above it. If we didn't close above that fair value gap, it wouldn't be called inversion fair value gap. But now, since it's the only inefficiency that is found on the opposing side of delivery. Now, since we had a buy side delivery here from early August towards late August, you name it, going from looking for the sell side delivery that happened here from mid July to early August, I'll be annotating and looking for the fair value gaps, which is this only fair value gap that is present here in this swing, and I'll be annotating it because it is going to be uh, a key level for me in addition to the actual fair value gap that I have drew attention towards. So I'm expecting price to, if it wants to retrace down or not from here, it might just touch the weekly fair value gap and just run up higher towards that buy side liquidity. But if it wants to retrace deep down lower, I'm looking at this fair value gap, the levels that I've mentioned, and the fair value gap here from the sell side delivery that happened prior to the buy side delivery that happened here. So I hope I made some things clear, and if there's any questions or if you want to discuss any of the information, please don't hesitate to message me on Twitter, or now it's called X. The links is in the description, and also you can join our community and on the Discord where we share ideas, where we pretty much tape read some sessions, back tests, and all of that business. Check out the link in the description to join our Discord server. I really hope you found this one insightful. Until I talk to you next time, be safe. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.